There's a type of Bermuda Triangle forming over the stock market, not the kind that downs airplanes and ships, but rather the kind that pulls down the S&P 500. As global tensions continue and concerns over oil prices rise, we'll take a look at the technical signals, commodity pricing, and seasonal forces, all putting significant downward pressure on the US stock market. I'll also do a quick review on 2 more winning trades, check in on American Express, and leave you with a new trade idea. Let's start with the Bermuda Triangle. The first leg in our triangle is technical analysis. I won't belabor this because you can go watch previous market forecasts where we've been talking about bearish divergence for quite some time, and it's beginning to play out. One thing I have not mentioned a lot recently is also our moving averages. Here we have the 100 and 200 period simple moving averages, and you can see the S&P 500 has broke through the 100 and is now testing the 200 as support. Now, should the 200 period simple moving average fail to act as support, that would open the door for a continuation downward with potentially a significant distance the S&P 500 could travel. Now let's also look at the NASDAQ, ticker symbol QQQ, and you can see that it is even closer to the 200 period simple moving average. Should this fail as support, it opens the door for a lot further down that both the NASDAQ and the S&P 500 can move. And that's just the simple moving averages. If we take a look at the stochastic oscillator that we talked about in the last market forecast, you can see we've got a lot of room to travel before we start getting into oversold territory. The situation with the technicals is ripe for a downward move. Now, the second leg in our triangle we can look at is commodity pricing. And to check that out, we're going to look at ticker symbol BCOM, the Bloomberg Commodity Index. And this is a conglomerate of 6 different sectors of commodity pricing, obviously being significantly impacted by the price of oil. And the general thinking on this is as the price of resources, commodities increases, it's a type of tax on the economy, which is going to put additional downward pressure on the stock market. So we've talked about technicals, we've talked about commodity pricing. The third leg in our triangle is seasonality. Going back to the S&P 500, I've created an indicator, which I'll put a link to in the description below. This is the Presidential Cycle Composite indicator. What it's telling you is how the market tends to behave in the second year of a presidential cycle. Here's how you read this indicator. The blue line is easy. That's just what's been happening in the current ticker, which is the S&P 500. The dark red line, it begins solid up to current events, and then it becomes dotted going forward. That is the composite of the last 10 years of the second year in a presidential cycle. And the spaghetti lines, as they're called, the lighter, thinner red lines, that shows you each of the 10 years of the second year in a presidential election cycle. And here's what I want you to see. I'm going to turn off the price graph for a second. In TradingView, if you hover over the title in the upper left-hand corner, click the 3 dots, come on down here to hide. One thing I want you to notice about this composite indication is if we zoom in here to about where this dotted line rolls over and starts on down, look at the spaghetti lines behind it. Again, this is the second year of a presidential election cycle for the last 10 occurrences. So this is showing you 40 years of data. And look at all the lines. This one here is an anomaly. It does continue to head on up, but after that, it heads down, 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 and this one goes up. Historically, that means 80% of the time, the market has gone down when? About March 17th. Sitting here at March 12th as I'm recording this. Again, I would say this is downward pressure on the stock market. Moving on to our Southwest airline trade. What a great trade this has been. 2 times in a row. Go back and look at the market forecast that I produced on Tuesday. We talked about getting into Southwest Airlines right here. If you happen to get lucky enough to add to your position at the top of the wick, you're doing even better. But we are heading on down, and I expect this to continue on lower as the price of crude oil, ticker symbol BZ1 exclamation mark, or BZ in short, in TradingView. Today, as I'm recording this morning, the price of crude oil continues to rise, which is going to be crushing for Southwest Airlines. We are continuing to profit on this as it continues on lower. The other trade that we talked about, this one came from our Power Trader Live. If you've not participated in that, come join me on a Monday morning. We entered this trade in Power Trader Live back on March 2nd, and we have continued on down. This has been a massively profitable trade for us. Now, before I give you a new trade idea, let's talk about today's sponsor, us. If you want to learn how to read the story of the market for yourself, I invite you to come join me for a webinar on Sunday, and let's talk about charting. Every stock tells a story, where buyers showed up, where the sellers took control, where big money hesitated, and where it moved with conviction. Most importantly, it's a story of what's about to happen next. The chart is what tells us that story. It's written in a language that's been there the whole time. And if you've been trading for months, maybe even years, and are still struggling, it might be because you've chased strategies when what you really need is to learn how to read the chart. This free life training is designed to fix all of that. Scott Landers has spent decades reading charts at the highest level, not just for himself, but for institutional clients as well. His chart reading skills have been behind hundreds of millions of dollars in managed money. Scott also has a rare gift. He can take a trader who's been staring at charts for months, confused, maybe even frustrated, and teach them how to actually see what's happening and do it fast. There's no assumed knowledge, no prerequisites. If price action has felt to you like a foreign language, this is where all of that changes. In this session, Scott's going to show you how to read any chart, what it's telling you, what it's warning you about, where the opportunity is, and where the danger has been hiding in plain sight. I have a Zoom room reserved for us that fits up to 500 people, RSVP for free right now, and let's discover what the chart's been telling us this whole time. Sunday's webinar is at 4 p.m. Eastern Standard Time. Come join us for free and let's talk about charting. Now, before I give you your last trade idea, I want to update you on American Express. We looked at this trade in the last market forecast, and while I'm still optimistic about this bouncing off from support, there's enough downward pressure on the market that I would start moving up my stop and either close this for about a break even right now or keep a really tight trailing stop and lock in profit as it gets profitable. One trade that I do like going forward is Adobe. It's the stock that I love to hate. And this is a lot like that CI trade that we looked at in Power Trader. Here's a stock that's been in a long-term downtrend. One thing to be aware of is earnings are today after market close. So let's get through that. But I think there's an opportunity, and this is just a guesstimate of where price may land tomorrow morning. But as long as this doesn't gap too far, I think there's an opportunity for Adobe to come on down towards recent support here and even further towards support that we saw back in 2019. Now, a couple options for setting your stop. I've got it pretty aggressive here, just over a recent peak. That's how much I really don't love Adobe. But if you wanted to be more conservative, you could move your stop up here around 300, 305 or so. Leave a comment and let me know what you think about Adobe. Is it likely to go up or down? Come join us on Sunday. Let's talk about charting. And if I don't see you then, blessings and favor on your trades until the next market forecast.